I'm Justin Bebis. I'm the founder and CEO of Conclave. I run one of the biggest DeFi R&D firms in the industry.
The ecosystem kind of collapsed, and then you faced a decision, which was, what are we going to do next? And how did you approach that decision?
We try to figure out what it means to operate independent of a network. In 2022, I had to kind of reckon with the fact that being a good software engineer and being a good CEO were like totally opposite ends of the spectrum.
So what is Codex? What are you building over there?
Yeah, so Codex is basically our DeFi universe. We're creating native projects that are designed to onboard individuals and give them like good deals and good outcomes.
Why are you guys so convicted in this idea that DeFi is going to continue to evolve and to grow?
DeFi is not dead. DeFi is literally the dopest thing going on in this industry, period.
Awesome. Welcome to the podcast, and it's good to have you on again. First of all, who are you, and what do you do in the space?
Yeah, great to be here. I'm Justin Bebis. I'm the founder and CEO of Conclave, formerly known as Byte Masons for astute listeners of this podcast. I run one of the bigger, if not the biggest, DeFi R&D firms in the industry. We manage high value at risk development and engineering. We do cool research, and we just try to push DeFi forward. And we also have our hands in some other weird industries, but we'll get to that maybe in a future podcast.
Cool. So what's your background? I know the last time we chatted, we talked a little bit about this, but curious to hear about it again. What brought you to the space, and how did you get kind of interested in development?
Yeah, so my background is not super interesting. I started working very early on in my life, kind of evolved into a serial entrepreneur, started a coffee shop, ran that for a couple years, very highly rated, by the way. Transitioned for a while to data analysis and whatnot while my friends ran the shop, so I could, have a career change. And in early 2020, I saw a lot of writing about Bitcoin as a triple entry accounting system. And at the time, I was working in business analysis for a finance department at, a health tech company in Chicago. Mm-hmm. And since then, I was like super duper interested. I think, conceptually, programmable triple entry accounting systems are supremely dope. And I put my life savings into crypto in mid 2020 and, was turbo investing across the space, and got really lucky in 2021 and was able to kind of take my personal luck and onboard all the smartest people in my network to the industry. And since then, we've just been building nonstop.
So Byte Masons, how did that come about? I know you were kind of a big Fantom player in maybe 2021. Were you kind of bullish on Fantom as an asset and then got into building projects on the space?
Yeah, so the idea for me was I basically put my savings into Fantom because I was like obsessed with DeFi. Nobody knew that Andre was running Fantom yet, and at the time YFI was popping off, so it was like, oh my god, this is the easiest punt in the whole world. So my idea was, I want to do this as a career. I think it's awesome. So if Fantom doesn't work out and they can't attract the builders and the development, I'm just going to do it all myself. And then both things ended up working out. And that's how, you saw the Reaper farms, the OX DAOs, all the stuff we helped kind of ship security-wise on the network. And now we're here, which is really exciting.
So those were the early projects that came out of Byte Masons. You were kind of involved in kind of the solidly drama, and we won't get too deep into that today, but basically that was Andre Cronje's
your Hail Mary.
Yeah, Hail Mary, last, exit, maybe not exit, who knows. But in the space, post solidly, the ecosystem kind of collapsed, and then you faced a decision, which was, what are we going to do next? And how did you approach that decision?
Yeah, so really to me, passion is what got me into the business. I work with my friends against all the advice of my colleagues. And really we sat down, we were like, we're gonna freaking make this work. And at the time we had a big engineering staff already. And we sat down and we told people, hey, things are different now. Revenues are down 95%. There's a lot of decisions that need to be made. And a lot of people took, frankly, drastic pay cuts to keep building with us. So, from there, we try to figure out what it means to operate independent of a network. Because when you are kind of, here's this bespoke, beautiful beta to a single network, really simple to understand, straightforward. It's really easy to talk to investors and users. It's like, hey, we're the Fantom guys, use our wacky apps. So we tried Aurora, if you remember, Near's Layer 2 network,
Right.
which got turbo nuked and farmed. Their airdrop was farmed almost entirely by Alameda. Their wallets were basically all the TV on the chain, which we realized too late. Learned a lesson there. And then we kind of moved to Optimism, and since then have built a really productive relationship with them. We just ran their whole DeFi Superfest campaign, so management, execution, business development. We onboarded over $200 million to the network, over 70,000 users in collaboration with the Jumper Li-Fi team. So that's really cool. We built Ethos Reserve with them. Had to unfortunately get killed by the USDE carry trade, but yeah, I mean it's been a massive challenge, but I think really like the experience has been unbelievable. And if you remember back in the day, I was like a big Ethereum security software engineer guy. I was like, oh, the tech will solve all problems. But in 2022, I had to kind of reckon with the fact that being a good software engineer and being a good CEO were like totally opposite ends of the spectrum. So
Right.
lots of reading and learning and making mistakes. But yeah, we've survived for 4 years, which is kind of insane.
And it's a lot longer than a lot of people can say.
Yeah. It's interesting at the very least watching like really well funded companies just rise and fall over the course of a year or two while we've just been chugging along. And I think it's like a little bit of a pain tolerance thing. It's a little bit of like a passion thing, passion for excellence, passion for DeFi. But yeah, it is like we're the ethics guys, and somehow like it always works out for us. So I think good karma maybe.
Right. And it's interesting that you say kind of a lot of the team took pay cuts and was you guys were kind of really on the back foot in kind of 2021, I guess. Because often I think industry observers or retail investors think that like the developer class is kind of untouched throughout even bear markets because funding continues to come in around development, but it's not the case.
Dude, peanut butter jelly sandwich season for a year and a half for every developer. Building for intention, building for passion. I mean, there's always like developers who can swoop in, help execute, either an illegal scam or a legal scam, and swoop out. But really, it was like our whole thing was we want to maintain course. We want to build toward the ultimate kind of DeFi yield lending credit tech stack, and I think we're pretty close. And really like we've had the biggest staff operating for probably less than anybody else could have possibly operated it for a long time, and we've got a lot of technology to show for it.
Phenomenal. Awesome. Well, we'll get into that in a sec. I do want to talk a little bit about your guys' kind of migration to Optimism in the superchain, because it seems like there was kind of a Fantom to Optimism pipeline.
Yeah.
And obviously, Velodrome, Aerodrome coming to Optimism and Base, and those were kind of the successors to Solidly. You guys didn't pursue that direction, but you ended up in the same place. Why is that?
Yeah, I mean, really, the Beethoven X guys moved there, and the
Hmm.
Tarot guys moved there, and we're homies, and it was just like a comfort thing, to be honest.
Right.
It's really like if you go from one ecosystem to another, it's like being the new kid at school.
Hmm.
You don't know anybody. Everybody at that time looked down on Phantom developers just because of what had happened there. So it was like awkward. But I think kind of learning how to literally like totally discount and just like ignore your entire history and just like act like a newbie, like, ah, dude, you're awesome, you're the smartest guy ever, I don't know anything. Oh, Phantom, oh, I just stumbled on there. And that was kind of how it was for a year and a half, just because of the stigma associated. um, but yeah, I think really like we stuck together like Thena on BNB. Like a lot of Phantom people coalesced around there.
Hmm.
Barachain, a lot of Phantom people coalesced around, and it's really like there aren't a lot of hardcore DeFi people in the industry, um, and they kind of flocked together to a
Right.
certain extent. So we found a home, and I think that home is really like as an outsider a little bit. There's like DeFi is kind of this gang of outsiders
Hmm.
right now. It seems like so. Really happy to be here. I guess I've been saying that
Excellent.
a lot, but I am truly ecstatic to work in this industry and work on these problems.
Well, that's good. Um, it's a good mindset to have, and kind of necessary. So, Byte Masons transitioned into Conclave. What was that transition, and was that just rebranding, or was that more ideological on some level?
It was a little bit of both. The transition to Conclave obviously came with, okay, let's like have hardline values, let's have a hardline mission, let's kind of really define what this organization is, and also let's kind of clean it up a little bit. One of the issues when your name is Byte Masons is Google deprioritizes your content, um, which is like really weird. Like we would make YouTube videos, and under them like would be a disclaimer about like the Freemasons, which was like a little bit alarming. So. And we got a good domain, conclave.io, I think,
Hmm.
and our branding is really sharp. Definitely check us out. Um, but we just wanted to kind of maintain a little bit of the culty vibes, being like a conclave is this big locked room where people debate about really like, powerful ideas. And, Byte Masons, conclave, we felt the latter is easier to brand, a little bit catchier, and kind of sheds some of the emotional baggage that comes with our early days. So it's like a little bit of a rebirth.
Right. So, how do you define the exact mission and goals of Conclave? Because that will get us into that next topic, which is what has Conclave built over the last kind of year or so.
Yeah, I mean, really, I think innovation, accessibility, and generosity. I think are three of our big values. Being, we want to push the needle. We want to contribute to the pool of public knowledge. We want to publish our research. We want to deliver open source technology. Accessibility being, we want everyone to be able to use our products. And right now I would say, one of the bigger teams working on declarative intents, being, hey, if we're going to reduce or lower cognitive barriers to entry, if we're going to improve outcomes for everyday people, and if we're going to really give regular human beings access to financial tools that they wouldn't typically have access to, being ones, frankly, more suitable for the average person's size, then DeFi and intent-driven solutions were the way to do that. And then, generosity being, we want to leave our users better than we found them.
Hmm.
So, like an idea that we have and that we've been able to execute on consistently, and I think it's one of the best feelings in the world as a builder, is when one of your users can look back at the time they discovered your team and your platforms and think, wow, that was an inflection point in my life. Even
Right.
even if it was a small one, I could almost choke up talking about it, but that is, I think, the most beautiful point for a builder. It's like, when the socially awkward person first discovered, social media and the ability to maybe anonymously or pseudonymously engage in social networks. We think the same thing, when the intellectually curious person who wants more for their family, who wants to improve their financial outcomes, finds us. It's a little bit of the same feeling. And we also like, this is just kind of like an internal meme, but we find that for some reason, some of our most active community members have like 5 or 6 kids or more, which obviously, like, okay, these people need to min-max their finances. But one of our theories is that if we just keep going long enough, we can kind of have the same growth strategy as the Catholic Church, and just like max out child rearing among our user base until we very long-term growth strat, but I think it's valid.
The next generation of DeFi is taking on a whole new meaning.
Yeah.
Cool. All right, so let's talk about the projects under the Conclave umbrella. The first one, which I think is also an umbrella in itself, is Codex. So what is Codex? What are you building over there?
Yeah, so Codex is basically our DeFi universe. So Codex at the highest level is a set of infrastructure and an application for declarative intent solving. It's also not live yet. Right now, we're kind of going through the fundraising and the kind of pre-market shenanigans, but we've been building this for 2.5 years. And really the idea is, like, we need DeFi to be way easier to use. Mm-hmm. We need to be able to onboard people way easier. And the world where, like, finance is 1,000 different single-purpose applications, and MetaMask transactions and yada, 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 and where every single team needs to maintain a front end is a little ridiculous. So we're kind of fighting against that, and kind of encompassed in that is our DeFi protocol R&D. So, if you've ever read our research papers about interest rate management strategies, autonomous money supply control, I can kind of share those with you after the call. We're releasing 3 more papers about our new novel lending infrastructure, which is kind of a modular monolithic system wherein the main monolithic pool that you might think of with Aave is able to extend lines of credit or extend collateral to smaller isolated pools. Basically trying to solve for fragmentation while still giving people everything they want. So very full spectrum, purpose-built lending infrastructure. And then Codex CDP, which is our way of solving kind of the liquidity crisis for decentralized stablecoins, being it's really too expensive to bootstrap liquidity, and we have a bunch of really novel AMO technology and similar, and also finally Reliquary, which has existed and we've been using in production, and the Beethoven team has been using and other teams have been using. We're shipping a paper for that as soon as the next couple weeks here. So next 6 weeks, 3 papers. We're doing a lot of Codex stuff, and essentially it's like Codex, the concept, and Codex, eventually the token, indexes all of our horizontal DeFi growth and research.
So talking around about that CDP, does that have anything to do with Ironclad, or is Ironclad kind of a separate thing? Because that's the second project I want to talk about.
Yeah, sure. So Ironclad will eventually be upgraded to include Codex Lend and Codex USD. Right now it's using our last generation stack, which is essentially, I'm going to explain it as simply as I can, but in order to do that, your users need to know what I'm talking about. But it is a system that we built on top of Liquidity, heavily audited. We added multiple collateral types. Most important feature we added was rehypothecation. So here is a CDP. You look at a CDP, you think, oh, look at all that collateral sitting there. Why isn't it doing something? We can rehypothecate it generalized way, if that's a way to put that. And what we found was like maintaining a solid risk return profile or risk adjusted return with those underlying assets is a little bit of a losing battle. We had to dodge a lot of bullets when we deployed the first iteration of the system because we were spread out a little ways, and we were like, okay, we don't trust other yield providers. So what we've done is we've implemented our own lending platform, kind of almost the same as an Aave V2, and connected it to the bottom such that using the lending platform, users can borrow directly from the CDP collateral and pay the people that are minting the stable coins. And what we've created is a system that's 17 times more efficient than our predecessor Liquidity. And when people use the CDP, it's 4+ times as efficient as an Aave. So we think we've really found a solid type of product, but right now I would consider it fairly MVP. We're relying very much on open source code. It's not like purpose built. I don't want to say it's hacky because it is honestly a really elegant system. Using the lending architecture to borrow from the CDP architecture,
Right.
but we're pushing that forward with our next generation tech. So that is what's on Ironclad right now, and that's how IUSD works.
Okay, so to kind of define that to the newer DeFi user, that would be Liquidity as a decentralized stablecoin protocol, which allows you to deposit collateral and mint a stablecoin against that collateral. The issue with that is that collateral doesn't do anything.
Yeah.
And what your lending solution does is it puts kind of an Aave-like structure below that architecture to allow that collateral then to be used and to be lended out as well. Is that a fair characterization?
Yes. So essentially, instead of being just stored and sitting dormant in a useless smart contract, the CDP stores its collateral in a lending market. And thus you have essentially modern banking infrastructure. It's frankly an awesome system, but we don't have the fine-grained controls purpose-built to manage risk, return, and money supply for a protocol like this. So that's what our next generation infra is, basically totally cleaning it up and cementing it in a unified, much more scalable system.
So that exists on Mode, and I know there's a component of Ironclad which is kind of has to do with the Mode token itself. Can you explain that?
Yeah, so kind of our thesis. So we have Ironclad on Mode, and then recently we deployed Lore, LORE .finance on Scroll. Kind of the idea is if we can create the most bespoke, highest yielding, most compelling beta to a network token, we can kind of solve a little bit for the low float, high FTV problem. So, we see that users don't really want to buy long tail assets. They have learned that when you buy something that has a massive cliff or overhang, that you get wrecked. So what we do is, the VCs can enjoy their tokens, they can trade it on Binance, they can have their kind of ecosystem. And then we, native to the chain, build out ecosystems using this credit infrastructure wherein we are not only net buyers of the native token, so really positive kind of symbiosis with the chain. So for example, on Mode, we accumulated $250,000 of Mode tokens in the first month from the token launch. So from initial airdrop to airdrop number 2, we kind of staggered things out. We accumulated $250,000 of Mode. Our team currently has around $16 million of Mode. And stakers are yielding like 60-70%. And all of that is fueled by our highly capital efficient system and our highly optimized incentive strategy and accumulation strategy. And so, if you're going on Mode and you want exposure to Mode tokens, you might look at the FDV of Mode and think, that's kind of pricey for me. I'm managing a smaller portfolio. There's not a lot of yield here. I mean, honestly, at these prices, maybe there's not that much, that many blockers for the average user. But think of Scroll, for example. On Scroll, the Scroll token is going to be totally inaccessible to the average person. But if they buy the lore token, not only do they have really highly reflexive exposure, but they also have yield. And we're doing the same thing on Mode, and we're working with literally every foundation under the sun on creating systems like this. And we call this the Codex Network. So using our technology, we're creating native projects that are designed to onboard individuals and give them like good deals and good outcomes. Because, as much as I love VC tokens, and I think VC tokens have a place, they can fuel yield at scale, they can fuel innovation at a huge scale, they can fuel distribution at a huge scale. I think for the average person, if they buy the ICL token for Ironclad, that is effectively buying Mode anyway, and so the net outcome for Mode is the same or better, and the net outcome for the user is the same or better. And that's the mission.
So it's essentially whatever token that kind of exists under this model is I'm buying the kind of base layer token, and then I'm also buying everything that's associated with the protocol infrastructure itself. So I'm kind of doubly exposed to the ecosystem.
Yeah, it's kind of like we found that natural demand for lending, DeFi lending, is not nearly as high as demand for market exposure or demand for tokens. But what DeFi lending is really, really good at is building up alignment, distributing tokens, and also having that utility and that revenue generation capability on the other end. And then for us, with our CDP mechanism, our stablecoin, we've gotten so efficient that if we emit tokens and inflate the protocol token supply through the stablecoin, we can achieve sustainable outcomes. We can generate more revenue than we're spending in incentives. And that's the ultimate goal, because then it's like, oh, wow, here is this system where I can get this really beautiful bespoke exposure at a really nice, affordable price. And, oh, there's also yield. And really, like, we're going to keep pushing. And I think where we really unlock demand for DeFi lending is when we can create more under-collateralized primitives. And that's really what we're focused on, is creating a means of generating leverage and borrowing that does not require, like, here's equally premium collateral that I'm setting down and getting like some capital efficiency subtraction on. Because that, I mean, it's great. I use these systems a lot, but I think the risk return or the appetite for risk return for the average crypto user is much higher than that. So it's kind of a narrow market right now.
Right. So I guess one of the questions I kind of want to broadly ask to you, and I already know your answer, and I think anyone who's listening already knows your answer, but is DeFi dead? And obviously you guys are making this bet that DeFi is not dead. When there's so much kind of anti-DeFi sentiment and there's so little energy and there's users are down, TVL is down, why are you guys so convicted in this idea that DeFi is going to continue to evolve and to grow?
Yeah. I mean, really, like, when you onboard someone from fintech into a DeFi company, their jaws drop. Mm-hmm. And I've experienced this moment probably 5-6 times now. When they see how we build products and how we scale products compared to their previous employer, compared to standards in Web 2 and fintech and finance more broadly, their minds get blown. So, starting from that as kind of the root level experience that a lot of these investors have never experienced that. Users certainly have never experienced that. The moment where the switch flips for a technical person. And really, tech is tech. We can't, people aren't buying the tech, they're buying the outcome. They're buying the result, the product. So I think really for me, preface this, yes, DeFi is not dead. DeFi is literally the dopest thing going on in this industry, period. But kind of pushing that a little further, it's what we see now in DeFi is an MVP. And, you know, what it took for TradFi to get where it is layer upon layer upon layer upon layer upon layer upon layer of technical debt that is not transparent, it's not accessible, it's not technically viable. Scaling it is supremely expensive and supremely difficult, and it's crumbling right before our eyes. You've got the COBOL cowboys running around trying to maintain these big IBM mainframes with their stupid old language. It is what it is. And what we see in DeFi right now, in its very MVP state, is it's making ETH valuable. It's smoothing out growth curves for foundations and for networks. It's allowing us to adjust risk and return in a really fine-grained manner. It's allowing us to distribute incentives better than they've ever been distributed in history, and in a way that can't happen elsewhere. And further to that, you think about, why are NFTs valuable? Why is social fi valuable? Why is anything else on blockchain valuable? It's because it's awesome financial infrastructure. And the financialization of art, the financialization of social networks, the financialization of data is why blockchain exists. So I think of DeFi really as the base layer. And the thing is, like, we don't need hype to survive because there's real fundamental value in DeFi. Mm-hmm. We don't need investors to be excited about the next big low float, high FTV scam, because we can operate in the grassroots and not, frankly, give a hoot about what speculators or what kind of the purveyors of hype are up to. And there's always demand. There's always going to be demand for arbitrage and yield, ignoring everything else. So to say that the thing that most people use blockchain for, the thing that most people are interested in, the thing driving all this demand, and the market that 75% being financial services of people in the world are using actively and frequently, is not the creme de la creme of blockchain technology. To say that it's not the ultimate thing that we've brought into the world and offered to the world, like I would say me, and I would say many other DeFi founders feel this way. Like, with my knowledge and my skill set in building in DeFi, it would be like, and this isn't to say like I have an ego or anything like that, but it would be foolish of me and it would be a detriment to society if I stopped. Ignoring what investors might think, ignoring what speculators might think, ignoring what kind of the short-term thinkers might think. DeFi is why blockchain exists. It is financial infrastructure, and every DeFi founder should freaking pat themselves on the back for having to even look at this kind of debate. And really, I think why people are not that bullish on it is because it's kind of transitioned from, here's this hypey bubble, to, okay, here's this fundamental thing that we can sit down and evaluate. And when you have a hypey bubble, you can mark it up as high as you want and sell it to retail at any price. But when you have fundamental value, it's harder to justify the insane multi-billion-dollar valuations. And I think that's why people are fading it. It has nothing to do with its utility. It has nothing to do with its effectiveness. It has nothing to do with its long-term prospects. And frankly, DeFi is like awesome. Very biased, obviously, opinion, but the technology just blows anything else we're trying out with blockchain out of the water. And I think a lot of the detractors know this. It's just like, it just doesn't pump because it has fundamental value and it needs to grow normally instead of, based on, tweets or podcasts.
So that's interesting. Obviously, it means it's not going to experience this like bubble hype cycle like, WIF is or whatever, but it also creates a new kind of class of investable assets that is more compelling to a more traditional investor who's focused on things like revenues and cash flows, stuff like that. There's some, if you guys offer a product that provides yield, right? And you guys can capture some percentage of fees, then there is some fundamental value there, and there's some price where it's worth investing in. Where if you look at a meme coin or something, that's not necessarily the case. The other thing here is if we look at memes, the infrastructure that memes are built on is all DeFi infrastructure. So people will be like, buy memes, but DeFi's dead. And obviously it's an oversimplification because they're using the infrastructure. The meme couldn't exist without a decentralized exchange. So interesting stuff there. And I appreciate the passion. And I agree, DeFi is not dead. I recently saw a tweet of yours coming out of Consensus where you talked about kind of some general industry themes, and I think you're continuing to gain more and more credibility, not only as an industry builder, but also as an industry observer, as someone who's been a stalwart and has been here for many years and is dedicated to continue here for many years. So I want to ask you about some stuff kind of external to DeFi and just some of your opinions on the industry. The first one is going back to what I was just mentioning, memes. So how do memes fit in this picture? Net bullish, net bearish? What do you think?
Yeah, I mean, I'm neutral on memes. I think it is a retail slaughterfest, and that needs to change. But everything is a retail slaughterfest. If you give retail access to something that will slaughter them, eventually someone will find it. But that's all to say, I think memes are interesting. I think from a regulatory arbitrage standpoint, they're very interesting. Seeing how the law interacts with memes, I think will inform a lot of DeFi legal strategy. So it's nice to have this big, giant buffer in front of us for lawyers to scratch their heads at so we can kind of learn from it. And I think also in terms of generating economy, generating fees, memes are awesome. And my city, I'm blessed as a finance nerd. My fiance is an accountant for the city, so I get to kind of talk about their books and talk about what they're spending money on and what they're making money from. And the number two, there's one casino in town. Well, there are two casinos in town, but one is failing. There's one casino in town, and it is the second largest source of revenue for the whole city. And this is a city in Los Angeles County. So I think that ignoring like ethical quandaries related to gambling, related to that sort of negative sum game, people always posting about pump fund, value extraction, yada, yada, yada. Ignoring all that, I think it's a great percolator of economy. And I think really right now, we're in a moment where we're thinking, okay, how do we protect retail better? And it's always like new meta is created, retail can have fun for a few weeks until the best traders kind of dig in and figure out how to game them, and they start eating retail's lunch. And then the engineers watch the traders and they're like, okay, let's turn this into an algorithm and let's start eating the traders' lunch. And then the scammers look at the engineers and like, okay, how can I exploit their system? And then they start eating the engineers' lunch, and then we need a whole new meta. And that's where we're at right now. So I'm excited to see how they evolve. And frankly, like, we would be remiss to not think about how our technology can apply to meme coins and the meme coin economy. How can we generate fees from this sort of excitement in a way that fits within our value set? So we are thinking about that, and we'll probably have some papers in the next few months about kind of where we think meme coins are going and how they could get there. But yeah, I know that was probably a longer answer than you were expecting, but net neutral, but excited about the economy that they create and excited to see the meme coin vertical become healthier.
No, that was a phenomenal answer. The next one is real world assets. So it's kind of the other side of meme coins is like this real onboarding of real world assets into crypto ecosystem. So what's your take on that?
Yeah, so RWAs are tough because nobody wants them. We have relationships with every big RWA provider, even the biggest ones, wink. But it's really like we are the guys that build DeFi products. And so, the conversation is always, how can we help take these real world assets and put them into a DeFi secondary market? And really, as part of that process, obviously, we interview people, we talk to people, we talk to issuers, we talk to users. And it's like the issuers want everybody to like them, but nobody actually likes them right now. So I think there are a lot of kind of fundamental like value proposition type things that need to be figured out. The risk return appetite for a DeFi user is much different than those of a money market investor. So work in progress. I would say RWAs, they've got a long way to go, but it seems like they have enough money to hopefully figure something out eventually. I'm excited for securitized products. I'm excited for on-chain REITs, which I think will come in the next couple of years. Really, I'm excited for any sustainable source of yield that isn't just like here's reverse repo, short duration treasury type stuff. So yeah, I would say the only market for RWAs right now are like either legal use cases for RWAs. It's like finding teams that don't have access to treasuries, but not for an illegal reason, but for like just a jurisdictional reason, like it's awkward to get access to them. Let's say a company like that has a massive treasury. That's kind of the market right now. Like you go out, the best RWA team is going to be the best sales team. You go out, you're like, hey, I see you have $30 million of cash in the bank doing nothing. Here's this cool BlackRock token. You want to just ape in here and improve your financial outcome? The answer will sometimes be yes. But I would say for a DeFi builder, it's not interesting yet. But if we give it a couple years, I think it'll get very interesting. The cash carry trade obviously is cool, but that's like half RWA, half not. I don't think people know what to think about it too much yet.
So that's kind of an interesting point you bring up is like, okay, RWAs aren't compelling to the existing crypto user, but could RWAs on crypto rails be interesting to the average, TradFi user? And what I mean here is like, there's interesting opportunities for lending perhaps, or different ways of generating yield on, a tokenized treasury or a real estate trust, something like that. Do you think there's something there, or do you think it's really around the crypto user that people have to focus?
There is something there, but that's a long-term game. Right now, like if you think about the growth of infrastructure, the growth of awareness, the growth of a product suite, whatever, you always have to kind of start with your evangelists, expand out into your obtainable market, which for tokens is crypto people. Then your addressable market, okay, maybe centralized exchange people. And then you can finally break into the total market. And we're very early on with RWAs. And people are like, oh, the tech exists. Why isn't it just huge yet? And really it's because enterprise needs to adjust. And I think really like normies are going to get them whether they like it or not. What I talked about earlier, the technology, like tokenization is just freaking good. It's just extremely dope, extremely useful, allows products to scale way better. So it's going to underpin financial markets, period. I don't think people need to necessarily be interested in them for that to happen. It's just a timing thing. It's going to take years, and it's going to take a lot of like lawyers arguing, judges arguing, regulators arguing, and eventually we'll have an outcome that will pump our RWA bags. Just kidding.
It's interesting. I just talked to Josh Cornelius of Seed Club, who's super bullish on kind of a similar concept, tokenization. And his take is kind of that, it'll sort itself out, and tokenization in and of itself is this incredibly useful primitive. So it's interesting to see you guys align on that. Related to his kind of investment thesis, how about consumer? Do you guys see yourselves as consumer tech? And if not, what are the consumer areas of consumer tech that interest you?
Yeah, we're like, financial applications are so boring. It's hard to say it's for the consumer, but we are building retail financial products. We're building in declarative intents. We're building onboarding products. So we're on the finance side. We're building consumer, but right now it's like I mentioned, very much at the infrastructure level. It's like we need to prepare to build what will onboard consumers. So Next couple years, I think I can confidently say, I can onboard my mom without having to stand over her shoulder with our tech stack, which would be cool. Maybe even as soon as like 6 to 12 months, but we'll see how hard I can whip the developers. And also on the consumer end, believe it or not, maybe I'll give you a little bit of background. How I met my co-founders and some of the members of our team, which I've known for a long time, is through a shared interest in music and fashion.
Wow.
We met each other on Twitter in like mid 2010s, like 2015, 2016, 2014, and we were just like, okay, we like outsider art, we like high fashion, we like cool music, and we just became friends. And everybody who's into like weirdo stuff like that is I don't want to say they're generally pretty smart, but it kind of takes a certain brain, maybe like a certain spectrum of brains, if you know what I'm saying. We have had an opportunity in the past couple of years, and this harkens back to the beginning when I say we're dabbling in weird industries, to team up with a celebrity brand to build fashion e-commerce infrastructure. So there's kind of this. I mean, if you ever dig into fashion e-commerce and fashion retail, it's like a total mess. It's like optimized for form over function. And so apps like Temu, apps like Shein, mobile first, high tech like purveyors and stores are just dominating the old guard. Legacy fashion brands cannot compete in the modern age, and they're just losing market share. They're not very profitable. Their margins are razor thin. Because they just didn't invest in tech early enough, and now they're paying the price. So we're creating a set of infrastructure and an application on top to solve a lot of these problems, improve the quality of sales, introduce gamification using blockchain in a totally abstract way, and introducing a lot of cool AI-powered recommendation and fit matching tools. So we have a special projects division in our company that's working exclusively in fashion right now. And honestly, I think consumer is going to be huge. Blockchain just makes everything so much more flexible and scalable, especially as people kind of expect more gamified experiences, especially as people kind of expect more portability in the things they use. So we're working with a very special blockchain network to make that a reality. That is not live yet, but hopefully they will be in the next 4 to 6 months. So very bullish on consumer, and really consumers aren't going to know that the blockchain is happening. They shouldn't have to care. And I think one of our goals is to get these high-end retailers. In the same way we in DeFi are jumping ahead of traditional finance, I think that we can empower some of these legacy retailers to jump ahead of the really hyper-technical Web 2 mobile-first retail experiences.
Right. Yeah, sometimes I think about kind of crypto as a platform, like in and of itself, and you talk about portability and kind of the ease of, spinning up a new app or something based on the fact that crypto infrastructure is modular and is repeatable. The last one, and then I'll let you whip your developers and onboard your mom. But AI and crypto. So how does that fit into your vision, and what do you think about its relationship to crypto?
Yeah, so we've been building at the intersection of AI and crypto for about a year and a half now. Declarative intents are where we think AI gets really cool. So being able to solve intents locally, an intent just being like a declarative intent is saying like, hey, I want yield, and then we figure it out for you. Mm-hmm. Whereas intents, as you traditionally think about them, would be imperative intents, which is just like, I'm either going to outsource a transaction to a market maker, or I'm going to just have a slightly better UI. Declarative intents, I think, are really a game-changing moment for interfaces, generally speaking. And the reason I'm really bullish on AI as a tool for creating these agentic interfaces, agentic experiences, and intents is the two things that make a successful AI agent are observability and like action. So, you know, the quality of the observation with blockchain, where everything is transparent, everything is open source, or a lot of stuff is open source, everything is well documented, everything is kind of in your face. Really, really great. Like if you try to interact with the Stripe API with an AI agent or whatever, it's going to do nothing. It's going to be useless. And kind of on the other side of that, being, you know, how well can this agent execute? How well can it act? The strict determinism of blockchain is an absolute perfect complement to probabilistic AI models. So, you know, you generate this transaction, or you generate this engagement with the blockchain, and you have a smart contract there to make sure that the outcome is what you expect it to be, and it can revert otherwise. So, very, very bullish on AI times or X blockchain. I think federated learning is cool. I think it can happen on chain or off chain. So, you know, it's like I like to work on things that are impossible for, you know, people to do outside of the blockchain. And so that's why I'm really focused on deterministic intent. So I think number one thing for a blockchain company is defensibility. How will you succeed in an AI centric world? And as long as you can say, oh, we'll be okay, and really think hard about it and swat it out, then you don't need to think about it too hard. And yield aggregators out there, you know, any aggregator should, you know, be on notice a little bit, because AI will, if not today, then eventually do what their technology does way, way better.
Excellent, awesome. What can we be excited about in the Conclave ecosystem, in the Codex ecosystem? What should we be looking out for?
Yeah, I mean, I think just pay close attention to Codex. You know, COD3XORG on Twitter. In my opinion, it's some of the most groundbreaking technology in the world right now. You know, it's going to improve financial outcomes for every single user. It's doing a lot of stuff that's not possible in TradFi or existing, you know, blockchain technology. So if you are plugged into Codex, then you'll get a piece of the Ironclads, you'll get a piece of the lores, you'll get a piece of all of the other stuff we're working on. And yeah, we're going to be shipping to alpha soon, and we're trying to get a bunch of testers on board. So please, please, please join the Discord, farm us. You know, we have some cool NFTs that are available to mint right now that get you some exclusive rewards. So yeah, hop in the mix.
Awesome. Justin Bebis, DeFi Maverick, comedian, high fashion connoisseur. Thanks so much for coming on. It's been great as always.
Hell yeah. Thanks a lot, Jack. Great to be on here.
Bye-bye.